Hey everyone, thank you for attending this session about Mexico digital platform taxes on Airbnb. In this webinar, we'll talk about tax withholding regime on the income obtained on properties located in Mexico. Doesn't matter if you're American, Canadian, but properties located in Mexico. So feel free to take notes because this session will be full of pretty relevant information. I would also like to mention that this session is not meant to address individual questions. We have a little under 1,000 participants right now, and you should consult with your tax expert for any doubts. Great. So before we get started, let's improve the webinar experience. In the case that you're watching us from your mobile, I highly recommend that you rotate this horizontally to get a better view of the details, tables, and formulas that we're going to explain. It's going to get a little bit technical, so it's going to be important that you do that. My name is Eric Cisneros. I'm the territory manager for Airbnb in Mexico, Central America, and the Caribbean. On this special occasion, we will be sharing screen with Gustavo, who is CEO of Fiscalia. Also, we will have Ron and Jeff, who are part of the consulting team of Deloitte. They will share with us their insights and knowledge about taxes in Mexico, the United States, and Canada, respectively. Starting with Gustavo. Tell us, Gus, what are we going to check out on this session?
Thank you, Eric, and welcome, hosts. I am very happy to be here with you today. As Eric said, my name is Gustavo Leal, and I am the founder and CEO of Fiscalia.com. So we are here today to talk about digital platform tax, digital taxes, and how to claim US and Canada taxes. But before we get started, I'd like to remind you that you can find useful information and resources related to this webinar at Airbnb's Tax Hub, which is at non-residents.recursosfiscalesairbnb.com. I repeat, non-residents.recursosfiscalesairbnb.com. The address should be showing up on your screen right now or on the chat board, okay? So now let's check out the first topic, digital platform tax.
Okay, cool. Now, let's get into it. Therefore, Gustavo, starting from the top, can you give us an introduction on the digital platform tax and what are they about?
Sure. Well, back in June 2020, the digital platform tax framework came into force in Mexico. This framework legally requires all digital platforms, local and foreign, to withhold income tax and value-added tax from users' gross income and remit them to the Mexican tax authority when users earn income from properties located in Mexico. Therefore, not only the lodging and travel platforms must withhold taxes, also transport, food delivery, and e-commerce marketplace platforms, among others, are required to do so. It doesn't matter if they're national or foreign, they all have the same obligation. Okay, so now you may be wondering, how does all this apply on Airbnb? So in our case, withholding is a process in which Airbnb retains an amount of money from the host to remit it to the tax authority on the host's behalf. Every digital platform that operates in Mexico is required by law to do so.
Okay, that's pretty interesting, Gustavo. And now going a little bit deeper into it, will this regime impact Airbnb hosts and how will that happen?
Well, that's the real question, Eric. So as a foreigner in Mexico, if you obtain income from a property located in Mexico listed on Airbnb, you are subject to withholding requirements of digital platform tax, okay? Regardless of your country of origin or residence, okay? So whether you operate as an individual or an incorporated entity, the default income tax withholding rate is 20% of gross income obtained from properties located in Mexico. For example, if you're a US citizen earning, let's say, $5,000 from properties located in Mexico, listed on Airbnb, your net payment will be $4,000, okay? Since 20% of the 5,000, this is 1,000, must be withheld to comply with tax requirements. This is the standard case. However, you should consult a tax professional to better assess your personal situation, okay? Note that the fact that Airbnb withholds taxes from your gross income does not exempt you from complying with your tax obligations in your country of origin or residence or other Mexican tax obligations discussed later. Okay.
And well, 20%, interesting. And what about the withholding rate that you just mentioned? Is it possible to lower it? 20% seems a little bit steep.
Yeah, it sure does. So only individuals or corporations with a Mexican tax ID number, which is referred to as RFC, only those are eligible for a reduced income tax withholding rate. If as a foreign tax resident you have an RFC, the withholding rate will drop to 4%. Okay. In case you are an incorporated company or a legal entity with a tax residence in Mexico, no withholding will apply. Let me repeat this. No withholding will apply if you are an incorporated company or a legal entity with tax residence in Mexico.
Okay, that makes a lot of more sense. So thanks for that information, Gus. Now, I noticed that you talked a lot about the RFC, that famous code, but how do all our foreigners living in Mexico or with properties in Mexico can get that famous RFC?
Well, that's a really good question, right? So, as a non-resident in Mexico, you can get your Mexican tax ID known as RFC, okay? You can file this procedure at your closest Mexican tax authority office. Okay, the requirements to get your Mexican tax ID are the following. Proof of address no older than 4 months, okay? Current immigration document or a multiple immigration form with your current passport. And 3, document stating your tax ID number from your country of residence. But for more details about documents and steps you should follow to get your Mexican tax ID, we suggest to visit Airbnb's tax hub, and I'll repeat the address is nonresidents.recursosfiscalesairbnb.com. I'll repeat it, nonresidents.recursosfiscalesairbnb.com. So it is strongly recommended also to get your Mexican digital signature. Here in the Tax Hub, you will also find companies that might help you obtain an RFC, okay?
Awesome. Good to know that there's some resources there that host can actually access to. So good. Hosts often ask me if they need to have a 1099 or an RFC. What should they have? Is it one or the other? Should they have both? And especially now that the 1099 has been asked to all hosts on the platform.
Yeah, well, that's a pretty common question, Eric. And that, as you said, there can be an RFC and also a taxpayer information form, the 1099, whether it is a W-8 or a W-9. And the answer is yes, you can have both, okay? And they're not exclusive. This is depending on each particular situation, of course. However, the system does allow for a 1099 form and an RFC at the same time. Most likely, if the host is a US citizen with properties in Mexico, they will need both, okay? However, as I've said, each situation is unique and should be consulted with a tax expert, okay? So I don't know if you'd like to talk about it, about the way to input this information and documents.
Yeah, now that you mentioned it should be, let's do that because it's important that the hosts actually have clarity on how to get that information into the platform. And great that you mentioned that it's most likely that they might need both because they're childs of two worlds, right? They're US citizens with properties in Mexico. That makes sense, Gustavo. And the way to input any of these forms is quite simple. The way to do it is to add a US taxpayer ID, just go into your account menu, then click on payments, then payouts, then go to the taxes section and click on the US taxpayer. Then you will have to choose what is the form that it's actually right for you, like just Gustavo said, and fill it out. Whether it's a W-9, it's if you are a US citizen or tax resident and receive payouts from listings in or outside of the US, a W-8 ECI if you are not a US citizen, but you file a US tax return, okay? That you receive a payout from your listing in the US and file a US tax return, to be precise. And finally, a W-8 BEN, that it's if you are not a US tax resident and don't have a US listings, or you are not a US tax resident and have a US listing, but don't file US tax returns. Basically, if you don't pay any taxes in the US and you pay them in another country. It is really, really, really important that you have this information filled out, not only because of the Mexican tax regime, but also because the US different tax legislations that oblige all digital platforms for their users and US residents to have their 1099 information into the platform. Now, if you have a property in Mexico and just like you mentioned, Gustavo, you wish to have a lower withholding rate by adding an RFC, the way to do it is the next. Just click on Add an International Payer on the same section that you had on the US taxpayer. Just next to the button where you can add an RFC, first click on Add an International Taxpayer. Then the platform will ask if you already have an RFC. In this case, we will assume that you actually do. Select, I have an RFC. Then you will fill out the information on your official RFC form. Once you do that, you have the option on putting a CURP code. This is entirely optional. This is mostly for people that actually live in Mexico, not necessarily foreign nationals that don't live in Mexico, as well as uploading the document. Once you do that, you have to check the consent box and save it. After you do that, the system will check if your RFC is valid, and you will get confirmation in your inbox in a few hours later. Okay, this is really important because actually the information will be sent to the Mexican tax authorities, will be actually checked that it's valid, and will come back. However, you must take into consideration that by applying the 4 or 0% for Mexican corporation withholding rate, you're required to comply with Mexican tax obligations such as filing a monthly and annual tax returns, paying your monthly taxes, and other requirements in addition to your country of origin tax obligation. With that said, would you add anything else, Gus, that maybe I'm missing there?
Well, Eric, I would only just like to highlight that by getting a Mexican tax ID, the RFC, you will be subject to tax obligations such as monthly and annual tax remittances and filings. And all of these filings are done electronically, okay? But another important obligation to get your eye on is the digital invoice, which should be issued for each transaction, okay? Mexican digital invoice can be prepared through the SAT's website. In order to issue invoices, you also need to have your digital signature, okay? There is also a commercial software for digital invoice issuing if you have higher needs of a more robust software, okay?
Okay, great, Gus. Thanks so much. And can the host get a withholding certificate for Airbnb? Let's say that they wish to just get those withholdings and credit them. Could they get a withholding certificate?
For sure, yeah. Airbnb will provide a monthly tax certificate totaling monthly tax withheld, of course. And you may view and download this document at airbnb.facturify.com. I'll repeat it, airbnb.facturify.com. This address should be showing up on your screen right now. And most foreign tax authorities will require you to have proof that Mexican taxes were paid. And these monthly tax certificates are important evidence of payment, okay? So they're very, very important. Many countries may allow for foreign tax credits to help reduce your tax burden. This will be discussed later for US and Canadian hosts. It is strongly recommended, again, to consult with your local tax advisor to assess your personal situation, okay? So now I think we should get deeper into digital taxes and check out the difference between them, okay?
Great, Gus. Thank you very much. Before listening to our US and Canadian Deloitte experts, let's talk about taxes in Mexico. So just like you said, and using it as a segue, what can you tell us about that?
Well, let's talk first about the Mexican income tax. Okay, regarding Mexican income tax, there are two modalities. Okay, for individuals earning less than 300,000 Mexican pesos, which is around 15,000 US dollars a year, there's an option to consider withheld tax as a definitive payment. So this means no need to file monthly or annual returns, okay? And for individuals earning over 300,000 Mexican pesos a year, they must file monthly payments and annual returns. Withheld tax, of course, may be credited against monthly and annual taxes. So that's for income tax, okay? But lodging or vacation rental industry in Mexico is subject to two other taxes. This is VAT, value added tax, okay? And lodging tax. So take note that every person doing business in Mexican territory must collect VAT equal to 16% of the price charged, regardless of their tax residency, okay? In that sense, if you have a property located in Mexico, you are required by law to collect VAT from your customer or guest. Later on, we will talk about the lodging tax, okay? But it is important to establish that the lodging tax rates range from 2 to 4% depending on the state your property is located in. This tax will also not affect your net income, okay? Since it is a charge added to your listings rates. So we have a VAT of 60% and a lodging tax of about 2-4%. Now, talking about VAT, okay, Airbnb will automatically add VAT amounts to your listing rates. For example, if you offer a property at $1,000 per night, Airbnb will automatically add a $160 VAT charge, okay, totaling $1,160 payable by your customer or guest. And then Airbnb will collect this VAT and remit it to the Mexican tax authority on your behalf, okay? Since VAT is a surcharge added to your listing rates, it does not affect your net income, okay? It also should be noted that this withheld VAT may not be credited against your income tax, okay? Now, as seen on screen right now, and taking the same example of the previous slide, if you are a foreigner but have an RFC, a Mexican tax ID, registered on your Airbnb profile, tax withheld will be half, okay, so 50% of the total VAT added to your list price. In this case, Airbnb will remit the 50% of VAT to the Mexican tax authority, and the remaining 50 will be remitted to you, okay? This is when you have an RFC. And you will be required to pay this amount to the Mexican tax authority, okay?
Great, Gustavo. Thank you very much. And just adding a little bit, if I understand, this is when they have an individual RFC, because if they have a company RFC, the total amount of that will be transferred to them, correct? And nothing will be withheld for income tax.
That's correct. That's correct. That's a good clarification, Eric. Thank you.
Okay, great. So there are two types of RFC. There's individuals and companies, just like Gustavo mentioned. So this is super valuable information, Gus. Thank you so much for sharing. Now, what information should our host know about lodging taxes, that it's also something important that comes out in the operation?
Well, of course, yeah. Just as I mentioned, lodging tax will be automatically added to your listing rates and collected if your property is located in one of the following states. So please take note. You'll be looking at them on your screen. So it's Baja California Norte, Mexico City, Estado de México, Oaxaca, Quintana Roo, Sinaloa, and Yucatan. Okay, so let's remember that lodging tax rates range from 2 to 4%, as I mentioned earlier, depending on the state your property is located in, okay? So this tax will also not affect your net income, since it is a charge added to your listing rates, same as VAT. And like that, lodging tax withheld may not be used as a foreign tax credit to reduce your income tax burdens. Okay.
Great, Gus. And now what happened if a guest actually requests an invoice, factura, as they call them in Mexico?
Yeah, this is a good question. And in case your guest requests an invoice from you, both of these taxes, VAT and lodging tax, must be included. Okay. So it will look something as follows. Okay, let's take the example on screen. Let's assume you have a 2-day stay for $400. Okay, you will need to add a 16% VAT charge. This is $64 in this example. And let's say you have a 3% lodging tax rate. Okay, so that'll be $12 for lodging tax. So the total of this invoice will be $476 US. Okay, but you will only receive $400 since VAT and lodging tax will be withheld and will be remitted to the tax administration on your behalf. This is if you don't have an RFC. Okay, as we mentioned earlier, if you have the RFC, then half the VAT will be remitted to you. Or if you have a corporate RFC, then no withholding will apply. So, and also, as I mentioned earlier, Airbnb will provide you with a withholding certificate as support evidence that these taxes were withheld and were remitted to tax authority. Okay. So, as I just mentioned, in case you have a Mexican tax ID number, this is the RFC, the invoice should comply with Mexican invoicing guidelines. This is very important. Okay. Because this means that the invoice must be issued digitally. Okay. So if your guest requests an invoice and you do not comply, guests can file a non-compliance claim to the Mexican tax authority. Okay. On the other hand, if you do not have a Mexican tax ID number, if you don't have your RFC, then you are not bound to follow the Mexican invoicing guidelines. Okay. You should, however, issue an invoice on your local guidelines terms. Okay.
This guide is intended for informational purposes only and should not be considered legal, tax, or any kind of advice. Before making any decision, please consult a professional.
And also, let me add something. I mean, I know that I know what you must be thinking right now. This is too much information to us. And yeah, of course, you're right. It is too much information. So that's why I would like to remind you that all of this information you can find at our Airbnb's tax hub. And I'll repeat, the address is nonresidents.recursosfiscalesairbnb.com, which is showing up on your screen right now. Okay.
Great. Thank you very much, Gus. And just adding into that note, right now we have some content, but that content will be refreshed and we'll add new one depending on the circumstances. So have that nonresidents.recursosfiscalesairbnb.com as a bookmark in your browser so you can check it regularly. We'll be uploading also this webinar and we'll be putting more and more articles to make your life more easy and you can understand more about this. And great. And now the time has arrived to introduce our first Deloitte expert. During the next minutes, we will be talking about the implications and claim taxes for the US and Canada residents with properties in Mexico. So thanks for sharing the knowledge on each topic, Gus. I really appreciate that. Now it's a pleasure to introduce you to Ron Sake from the Deloitte US. He's going to talk about how to claim the US foreign tax credit. Let's start with the next question. And how does crediting Mexican withholding taxes work, Ron?
Thanks, Eric. And first of all, very nice to be here with everybody and glad to spend a few minutes with the hosts. So straight to the point, folks might be thinking, well, when I get when I get payments from a Mexican property, I'm going to have to pay U.S. income tax on that. And I've also got this Mexican withholding tax going on. So that seems like a double tax. So in order to avoid double tax, a U.S. taxpayer is eligible to claim a U.S. foreign tax credit to reduce their U.S. tax liability by the amount of the Mexican tax liability. As an example, which is on the screen, say a U.S. taxpayer has $15,000 of U.S. income tax payable, and that amount includes the U.S. tax on the income received from the Mexican property. And assume there's $4,000 of withholding tax that was taken out in Mexico. So using the foreign tax credit mechanism, the U.S. tax liability can be reduced, subject to certain conditions we're going to talk about, from $15,000 down to $11,000 by using this $4,000 foreign tax credit. I want to emphasize again, as Gustavo mentioned a couple times, it's the only foreign tax credit, the only taxes that can be claimed as foreign tax credits are income taxes. You cannot claim foreign tax credits for VAT in Mexico. You cannot claim foreign tax credits for lodging taxes either.
Okay, great. Thank you very much. And what about our U.S. residents? What documents should they file? What documents should they use?
Yeah, foreign tax credits are claimed just as part of your ordinary U.S. tax return. And for an individual, you would include Form 1116. 1116 is what we sometimes say for an individual. And if you happen to be a U.S. corporation, you would include with your U.S. corporate return Form 1118. So those are, again, just filed as part of your normal U.S. annual tax filings. The other thing I'll emphasize, and Gustavo referred to this, upon request by the IRS, a U.S. taxpayer may well be required to show proof that they paid the Mexican tax. As was described, Airbnb will provide a monthly tax certificate to you, which could be used for this purpose. And that certificate does not get filed with your U.S. tax return. You just hold it in your records and present it if the Internal Revenue Service asks you for it.
Okay, thank you very much, Ron. And can you tell us a little bit more on how to claim the U.S. foreign tax credit?
Yeah, and it gets a little bit complicated, but taking into account the amount that the U.S. foreign tax credit could be is generally limited to the lesser of the Mexican liability that you paid or the U.S. tax on that income, the income that gave rise to the Mexican tax liability. You'll see a formula on the screen that's out of the U.S. tax rules. And as you can see in the formula, you compute the limitation by the U.S. tax liability, your total U.S. tax liability before the foreign tax credit, and multiply that by a fraction, the numerator of which is the foreign source taxable income, the income from the Mexican property, and the denominator of which is your total U.S. taxable income. Now, in that numerator, like I said, it's the income you receive from the Mexican property. It's the gross income, but you would also reduce that by deductions you've claimed on your U.S. tax return that are allocable to the property. And some of those deductions are things like management fees, utilities, insurance, taxes, depreciation under U.S. rules, and things like that.
Okay, great. Hosts, remember that this webinar is being recorded and you can come back to the formula whenever you want. With that said, Ron, which requirements are needed for claiming foreign tax credit?
Yeah, and I think the important requirement we need to keep in mind, Eric, and our hosts need to keep in mind, is that in order to claim a foreign tax credit, you need to make sure you have used your best efforts to minimize your Mexican tax. And I'll say something, emphasize something that was been said a couple times. Please consult your tax advisor on how these rules apply to your specific situation, because they are very complicated parts of U.S. tax law. But again, the key is you've got to reduce your Mexican tax to the minimum amount required under Mexican law. Gustavo said already, if your income for the year is less than 300,000 pesos, which is around $15,000 from the property located in Mexico, and if you have no other Mexican source income, you can make an election that the withholding tax imposed on you, what Airbnb withholds, is your final Mexican tax. And if that's the case, then the U.S. host will have minimized the Mexican taxes that are required to be paid in accordance with Mexican law, and you can claim a foreign tax credit for the withholding amount, subject to the fractional limitation we saw earlier. But if the host does not qualify to make the election to make the withholding tax its final liability, or chooses not to make that election, US tax regulations say that the host must exhaust all practical and reasonable administrative remedies to reduce the Mexican tax. Now, that's a mouthful. But what that means is you need to make sure you compute your Mexican tax based on your net income from the property. You have to file a Mexican tax return. And if the amount of tax due in the Mexican tax return is less than the withholding tax that occurred, you have to apply for a refund from some of the withholding taxes. You do note that if the US host can prove to the government, the US government, that filing a Mexican tax return would not result in a reduction in Mexican tax or a refund, then it may not be necessary to file a Mexican tax return to claim a US foreign tax credit. However, Mexican tax, as Gustavo already discussed, might still be required under Mexican law. Again, these are very complicated parts of US tax law, and please consult your tax advisor for more information, but know there are avenues available to avoid the double taxation and claim a US foreign tax credit.
Thank you, Ron. And this is a little bit more clear, a little bit complicated, but more clear. Thank you, Ron, so much again. It's been a pleasure to come with your participation. Well, moving on, last but not least, let's listen to Jeff Paisley from Deloitte, Canada. He'll be talking about Canadian tax implication, just as in the US, and how to claim the Canada foreign tax credit. Let's go with you, Jeff.
Thanks, Eric. And it's just as Ron said, it's a pleasure to be part of the webinar with all of you today. I want to start by saying, much like everyone else, that each host should receive the appropriate advice from their tax advisor, since each fact pattern is unique. However, in general, Canadian resident individuals and corporations are taxable on their worldwide income, which would include income from the rental property located in Mexico. The amount of net income subject to Canadian tax generally is the amount of gross rent less expenses incurred to incur such rental revenue. Common items being mortgage interest, property taxes, utilities, management fees, insurance, repairs, and capital cost allowance, which is the Canadian term for depreciation. Please also note that foreign tax paid to the Mexican tax authorities on such rental income would not be a deductible expense.
Oh, okay, very interesting, Jeff. How can our Canadian host claim that foreign tax credit? Now going more into the process.
Sure. A foreign tax credit is available to mitigate the potential impact of double taxation. The general concept of the foreign tax credit claim is the taxpayer should pay the higher of the two countries' tax rates, but not both. The amount of this credit is thus equal to the lesser of the Mexican tax paid in the year and the Canadian tax that would otherwise be payable on this Mexican rental source income. It's very similar to what Ron talked about for the US. Any amount of eligible Mexican tax that is not credited by a foreign tax credit may be deducted from the taxpayer's taxable income. The foreign tax credit is claimed on forms T2209 and T2036 and is filed as part of the Canadian resident's income tax return for the year.
Great. Thank you. And what are the requirements for claiming that foreign tax credit?
Sure. Well, although there are various criteria that has to be satisfied in order for the tax to be eligible for credit, there's a couple that I should highlight for you. First is that the payment cannot be a voluntary contribution. This essentially means the amount of the payment to the foreign tax authority cannot exceed the maximum liability as determined under that country's domestic rules or the tax treaty that Canada has with Mexico in this case. Any payment in excess of this amount is considered a voluntary contribution and thus is not eligible for credit. The second is that the tax must be an income or profits tax. Although generally speaking, this is a tax that is on the net income earned from the activity, a foreign tax imposed on gross revenue may still be eligible as long as it is tightly linked and subordinate to the net rental income and to the net income tax regime. Thus, for a host who is eligible to be taxed on a gross basis, for example, those that are earning less than 300,000 Mexican pesos, as a few others have mentioned before, such tax may be eligible for a foreign tax credit in Canada. For hosts that are not eligible for such election or who choose not to file a Mexican return to determine their final Mexican liability, the CRA may deny that foreign tax credit on the basis that the payment was a voluntary contribution.
Okay, thank you very much, Jeff. And are there any documents that may be requested by the CRA?
Yes, and it does come up quite often, actually. So generally speaking, the CRA requests supporting documentation for many foreign tax credit claims, although not all taxpayers will receive one each year, but I wouldn't be surprised if they did. For those that do receive such a request, either before or after CRA has issued its notice of assessment for the year, the taxpayer is generally required to provide such documents within 30 days, failing which the CRA will deny the claim.
Okay, thank you so much for answering all these questions, Jeff. I really appreciate your time and expertise in this. So let's go back with Gus. And can you give us a quick summary of the important thoughts and insights that we had in this webinar?
Well, sure. Thank you very much, Eric. So yeah, let's wrap up and talk about next steps. Okay. So first of all, we all need to realize that there's a tax regime, a tax framework in Mexico in which digital platforms must withhold 20% of their users' income. Okay, first. Second, you can lower this withholding rate by complying with Mexican tax obligations. Third, to comply with Mexican tax obligations, you must get a Mexican tax ID, the RFC. And fourth, your taxes paid in Mexico may be credited in your country of residence, but as we mentioned many times before, for this, please consult a tax expert, okay? So also, if there's anything you want to take a second look at this from this presentation, we will be sharing the recording when available, okay? You can also find all the information you need, I repeat again, in Airbnb's tax hub at nonresidents.recursosfiscalesairbnb.com, where you will be able to find this video when available, as I said. So thank you very much to everyone for joining us today and for participating. Eric, back to you.
Thank you very much, Gustavo, Ron, Jeff. And would like to thank you so much for attending to our webinar today, to all our hosts. And we hope that you found it to be valuable. Certainly a mouthful, but valuable by the end of the day. When you close out the Zoom meeting, you'll be receiving a link to a survey. Please complete the survey and let us know how we did. You'll also be able to ask questions via this survey and make recommendations for future webinars. Well, happy holidays and a great 2022 full of accommodations. Stay tuned to our communication channels, whether it's Facebook, website, emails, to find out about our upcoming webinars. Goodbye.
This guide is intended for informational purposes only and should not be considered legal, tax, or any kind of advice. Before making any decision, please consult a professional.